Good morning and Happy New Year to you all. Welcome to this week update. We are going to be looking at a couple of instruments and I will share my thoughts with you and some of the trading techniques that I use because it's not only that I look at the Elliott wave and the structure. Of course, the Elliott wave and structures forms the fulcrum of what I do here, but there are other things that we look into, like the RSI to double confirm, and also we look at the what we call the imbalances on the higher time frame and the lower time frame. If you are trading lower time frame, what we call imbalance, which sort of forms an attraction for the price when the price is trying to reclaim those imbalances. We'll talk about what imbalance is. And then, of course, you don't just look at imbalance, you look at what structure is playing out and your fib instrument to know where and where, price may want to touch. Now, what do we mean by imbalance? Maybe I should first say that because probably it might just be new to some of you on these up. Now, when you see this first bearish candle appearing here, it moves down to this point where we have this tail, creating a space from here down here, which will be an imbalance. And immediately we saw this bullish candle went up to reclaim some of those places. So there's a reclaim. And in that reclaim, they are forming their 1 and 2 wave. So but that imbalance has been, reclaimed there. The price went bearish again to this point, creating a space. And we saw another reclaim, which is this one. The tail of this candle reclaiming this point. That's also, a reclaim of an imbalance. Now, the only space where you don't have any reclaim, it's from this top tip here, because the price is actually forming a wave. Now, again, from this bullish candle, we saw a move to the downside to this point, and what you saw was just a little reclaim, leaving a space from this top to this point. That's a reclaim that the price would have to make. And that's what we call an imbalance. And this is an imbalance on the, upper time frame. So if you, I'm not going to talk about, I can only use this to tell you that there is an imbalance from this top of this greenish candle down to the top of this bearish candle. So there is a big gap here that we expect the price is going to fill. So we have to now look at this area. This area is the area of 113 and the area here, the area of 108. So price had managed to break that. Of course, price would have to move in this territory and get stuck in this territory before price begins to come to the downside. So we're going to talk about that. So we still believe that the area where we can even say this one here, if you look at this candle here, this green candle even had reclaimed some imbalances here. So it won't be at the top of this candle anymore because there is already a reclaim. So it's going to be from this bearish candle here, from this 111,250 to this point of 108. That's where we expect the reclaim. So not even up to this bearish candle. So the bearish candle here, the bullish candle here had done that reclaim. So we shouldn't expect that will be included in our reclaim. So it's from this point that we should expect, that reclaim majorly. So between 111,300 or 250 down to 108. So we should see price trying to make a return or a bow. So that's the first thing, which we're going to look into later. Then the other thing here is the RSI. the RSI had managed to kiss this. So on the RSI, we are seeing like emergence of 5-wave structure here, telling us that this going to the upside. Even on the weekly time frame, it appears as if it's a 3-wave, but it's a 5-wave structure from the low here, 1, 2, 3, and the 4 and the 5. So if indeed is a 5th, probably we might just see a double top here formation, and this will begin to go down. We shouldn't expect, this to actually break this seriously to the top, but we might be seeing, a further dip here. So we continue to watch that on the weekly time frame. Now, with what we are seeing now, it's still bullish, but because it's still bullish, the price just, made, look at the tip of this candle here, of this bearish candle. That is exactly where the price is reacting. So it's a major area that the price is trying to react. And so we want to see price react here to probably still negotiate the immediate support before it goes up again into this area, before we now begin to see a change of the pattern. So that is what we are expecting. So we are still expecting that this area of reaction of price may send the price a bit further down, probably to test immediate support here before we see a further rise. And the movement here will burn off the momentum. It will cause a shift of the momentum, the burn off of the momentum, where we have, because at the end of all this, what we want to see is a consolidation. What looks like a consolidation, but what looks like that consolidation will be an ending structure that we are looking at, an ending structure. Just like we saw here is an ending structure, a consolidation. When you are taking a movement, and you're looking at the structure of 1, 2, 3, 4, 5, or an ABC structure, in an ABC structure, you expect just one consolidation in the middle. But in a 5-way structure, you expect at least 2 consolidation in the middle. So, but at the end of it, you will see what looks like a consolidation, usually an ending structure. Here is an ending structure here, an ending structure, an ending structure, an ending structure that looks like a consolidation. Here, an ending structure. So we should look at what will give us a consolidation and ending structure soon. So that will be a sign, at least a sign that it will give us at least 3 to 5 or 6 weeks of consolidation on the higher time frame to tell us that we are at the end, and all you can begin to look for is how to now, negotiate to sell the dollar. So, but for now, we are not there yet. We are approaching it. We will soon be seeing the consolidation as we approach between this tail here and the height of this candle. That's the frame of where between this space and this space now. That's 109,500 and 102, 111 and 250 area. That's where we expect the consolidation to be taking place. Now, if we go on the daily time frame on DXY, on the DXY here, on the day time frame, let me zoom out. So we are seeing the 5 structure developing, where this is 1, 2, 3, 4, and this is the last structure, the 5th structure going up. And the last of this wave should give us a proper consolidation of the ending structure. That is what we are looking at now. So in this wave in itself, we had seen a formation of a 1, 2, 3, 4, and this is the 5th structure. So we shouldn't break here now. A break out of on the daily of 107,600 tells you we are now bearish. But for now, we are looking at the potentially price trying to test this resistance here before it pushes up. What do I think that may happen if price is not going to take this low now? So, and we're going to use this to create that ending structure. So probably this might just be the first wave. We might see a dip because in the ending structure, there is a whole lot of overlap that we should expect to see. Yeah. So if it's going to be that, we might be seeing this coming deep down here on the higher time frame, probably breaking and just getting stuck around this area to form the second wave of that ending structure. The third wave may go up, yeah. So this week that is coming, I expect that to happen. More a waste of time here, consolidation here, to give us a second wave, and probably a third wave higher to area of 110 or thereabouts. And we might also see the fourth wave coming to encroach, in the area of 1. If this is 1 indeed, we might still see price coming to encroach. And the last one may now give us, if it's like, we are going to wave 2 now. That means if it's a wave 2, actually it should be an ending diagonal. If it's a wave 1, we should be seeing in the fifth wave of wave 1, we should be seeing a leading diagonal, really, that the price is going to give us more higher. So probably it might just be giving us an ending diagonal. If that is what we see, we'll continue to look at that. So now on the daily, on the 4-hour time frame, what do we expect? On the 4-hour time frame, what we expect on the 4-hour time frame, this is the area of support that I think price may still negotiate. We may be seeing this as an A, more consolidation in the middle. If it's an ABC, more consolidation in the middle. I don't want to do anything in here. So I would rather want this to give me a consolidation, then one arm to drop to the downside, pick a buy from there. If we are buying a DXY, pick a buy from there, and that will be the third arm. Then we can now begin to see what unfolds from here. That's my thought on the DXY. So let's go to euro dollar. So let's allow it to load. On the weekly time frame on the euro dollar, we are going to look also at the area of imbalance that I explained here. Unlike the DXY, if you look at here, I said we saw this bullish candle, a movement, a reclaim, a movement up, and another reclaim. So we already had a bearish reclaim around this area. So we are looking at from here, between here, that's at parity, about 1.099 area as the area of reclaim that is possible, that area here, the support here, as well as the support here at 10228 or 2250 now. That's where we are seeing this reaction. So, that's the first support that is sending reaction. So we should see a completion of that ending structure between 1.02250 and the parity at 1.099. So that's where we should see this ending. It should be ending around that area, whatever it is in terms of the fib. I think we will look at it later. So that's I think. Let me just let me do something for us. Let me bring. Oh my goodness. Okay. I know what to do. I want to bring something there so that we would want to know that area. That area. Let me mark it here. So this is the area here. Good. So let me use another color for it. Let me use this for it. Okay. So we want to know those areas that we should expect that the ending structure should form in that area. So that's where exactly we are at the moment. Good. So within that space, within this space from here to here, we expect the ending structure to close. That's where the imbalance is at the moment. So now this is the daily resistance. So this is the area on the daily that will first signal that this is the fourth wave. 1, 2, 3, 4, 5. A break out of here, it's a confirmation, but we don't even need to get to that area before we know that something is amiss. I don't believe that price should take 104,695 now, or 104,700. A breakout of that, we are bullish. We are bullish. A breakout of that, we are bullish. We have to look at the support, and let's go and look at the support on the 4-hour, on the daily time frame. On the daily time frame, so this is the area that we cannot break for now. 105 104,587. So we shouldn't break that. And this is the support that we should be looking to. This support area of support between here and here. This is the area we should expect the price to come to. Maybe price may still go in deep between this area. Between here, that's the support line. Today's area, that's where we should expect price to make a U-turn. So if I want to go tell you again, between 1.03450, 1.03450 and 1.03926 area, that's where you should expect this to come to. And that may just give us a wave 1 of the ending structure, a wave 2 in that area. Then we go more down. Probably that might drag very close to the parity. Then we'll see what it's going to give us. On the 4-hour time frame, not until the structure of the ending structure fully forms, I don't want to do anything. So on the 4-hour time frame, this is the area, like I said, we should be looking at now. This between this area, this is the support area. So if I were you, I would be looking most importantly around this area, between this area of 1.0. So it's more clearer on the 4-hour time frame. This area of support, you can see a support, the third support. This is the area you should be looking to sell. And your stop loss, we don't expect price to break this resistance here. And it's also a support here. So probably a little above it, maybe around 1.03800 is where you use your stop loss. I don't expect price to come to that area. It's going to play between this area and this area. A breakout of here, we are bullish. So for now, I don't want to buy from here. It doesn't make any sense. This is just a correction, and might just be a wave 2 of the ending structure that we are seeing. Now let's look at USDJPY and what we are seeing there. Let's allow it to load. I believe I'm teaching us something that would help us. The network is awful. USDJPY. So we're going to, this one, I'll be looking at let's look at what the weekly structure is suggesting. A weekly time frame is suggesting. We are in consolidation, so this consolidation is going to go on for some time. So I believe we are almost at the end of this. So we are seeing this developing now. So yeah, we are seeing that we may be having an ending structure already around this area. So the first week in bullish, and the second wave might be ending bearish. But I believe that we still have to go, we may still go up one more time. Price may drop anytime soon. So within this frame of the first correction, price at take about 78, retracement to the upside. Maybe price may just take 85.4. We don't know. So if you put your entry tentatively at that 85.4 as an entry to sell, you watch for what the price is doing. So I believe this is a consolidation. It might just be the last consolidation that we're going to expect. It may go on for like 2 more weeks before we see a sudden drop. It just will be a sudden drop, because at this point, I think it's just like 1, 2, the third week it fell. So we don't know what they're going to do when they're going to complete this. But looking into the lower time frame to see what is developing in that area is also very important. So on the day time frame, we are seeing what is playing out here, which is might not be apparent to you. Let's look at the 4-hour time frame. That may show more about what is developing. So what I can see here now, if I zoom out, let me zoom out first. Now, this is the A structure to the downside. We believe that this is the fourth wave of the big move. This is the third wave, the fourth wave, and the fifth wave here. Then we now see the A structure that went to the downside. And in this A structure, we now completed it. And we are seeing the B wave structure going to the upside. And in this B wave structure going to the upside, it kind of gives us like a funny 1, 2, 3, 4, 5 structure. That is what it's giving us. Yeah, that's what this one is giving us. The B wave is giving us a 1, 2, 3, 4, 5 structure. It's very funny. But now, if this is the fifth structure up to the upside, we're going to see this also giving us like a 5-wave structure, because if this is the fifth wave. So we are looking at that. That's what we are tracking now. I've been quiet about it. So in this fifth wave now, we can see 1, 2. This is the third wave of that fifth wave structure. This is the fourth wave, I believe, and this is the fifth wave of 3. So we see 1, 2, and the fifth wave of 3. The third wave ended here, and the big 4 had ended around this area. So a break below 150, 15600, a break below 15600, a break below 15600, we are bearish. So that is where the area we are watching for. If we can go close to the top and catch a fall, fine for us, because that will be a massive drop. Then we'll look for a retracement to put in more sell. We are waiting. So now what are they doing? What do I think they are doing? If this is the fourth wave of 3, and this is the 3, wave 3, and this is the fourth wave. Now, maybe the ending structure is what I'm looking at here. So let's look into the 1-hour time frame to see what possibly may be playing out. Now, this is the fourth wave. And I believe this looks like the first move of the structure to the upside. If this is the first move to the upside, this may just be a wave 1, and the structure building might just be wave 2. This may just be an A, B, maybe a C wave of that, the second structure. Before we break more to the upside. The way this is now, we may have a regular flat here. We may have a regular flat here. So why do I say that? Where do I see a regular flat? We have seen the first wave, which may have gone in like a 5-wave structure to the upside. And this is 1, 2, 3, 1, 2, 3. Now, this broke the top of this A wave at about 105, yeah, which is the territory of a regular flat. And this may just give us an 100 extension to the downside of a regular flat. It may just, come here to kiss this area or break it slightly. So This area of 156,459 might just be an area you might be expecting price to move back to the upside without breaking this area of 15600. Now, what do I see here? You may see that this is giving us an A wave. Maybe in the middle here may just be a B wave, and we are going to see a sudden drop again for us to complete a C wave at this level here. And a further move to the upside might just give us the third wave of the ending structure. So that is what I'm entertaining, what I'm looking at. And that third wave may push close to 85.4 area, which what's this area here? Let's bring out the drawing. The area where you see in the yellow here may be the confluence area around this area of 158,600. Might just be an area where we might see the third structure coming to. Let's look at Nzdjjpy USD. What can we see on the weekly time frame on Nzdjpy USD? We are gradually edging close to today's forecast. Here, like we said, this had outdone itself. A couple of things might be happening here. We may be seeing an early reaction. This may continue to walk down and probably kiss this bottom. It may be heading to this point just to kiss this low before it bounces to the upside. It's still bearish. The formation of an ending structure in this place, anything is possible here. We might be seeing consolidation and price just going up and down, up and down, and up and down around this area. It may kiss this area, but it might not break this level. It might not break this level. So we see this as a low for now. Price coming to break this bottom is not too good, but anything is possible. We just have to take it as it comes and watch for reaction. That's all we can do here now. This area will be a potential area if price could break this area. All the liquidity in this area had been grabbed as far as I'm concerned. In fact, it outdone itself by grabbing more than enough liquidity around this area. So that's what we can see. If we go on the daily time frame, all you are going to see is consolidation and nothing more. The price is getting ready to move, so it's consolidation. So we can see this move. For me, it looks like we've done a 1, 2 here, a 3, a 4, and a 5 here. So having done that, we might be looking for a fourth wave structure, before we come to the downside. Let me go inside a 4-hour time frame to explain what I meant. Now, let me zoom out and bring out my drawing. What I'm seeing here, I'm seeing the first wave, the second wave, probably the third wave, and the fourth wave here. And this might just be the last wave that is extended to the downside. Now, looking at that last wave to the downside, from the fourth wave here, this might just be 1, a 2, a 3 in the golden yellow, a 1, a 2, a 3. Yeah, this might just be a 3, the fourth wave of that 3, and the last wave of that 3, which is in the golden yellow. So what we should expect is that price may push to give us the fourth wave of the golden yellow, and we may be seeing a last wave drop again. So price may come to take this area. If it takes this, it comes to this point, we are testing this area as the second wave and the fourth wave. Price should not break even this area before we see a drop again. So that is what this is presenting. We are seeing a break out of this wedge now. Price may clearly be going up, break this point. Once we have a break here and a break here, then a break here is also imminent. to push towards this point. Now let's look at gold. That will be the last one, and how to entertain gold. Let's look at the larger picture on gold. On the larger picture of gold, we still hold this view that we are doing a bigger pullback, which may give us an A, B, and a C to the downside. This is a wave 2 here, and a wave 3 being completed here. We are seeing a wave 4 to the downside. So we are expecting at least an 100 extension to the downside. We still hold that view, but overall, we are still bullish. At some point, price is going to break up to give us the 5th wave before we see a bigger correction. So we still believe that this is not complete yet. We may be seeing a further drop in the dollar in the coming week before we push to the upside. Now, I haven't said that anything is possible. Price may also push up from here and continue to break up. So we are within the mercy of this being our resistance for now to be broken. For now, we believe that this is an A wave. Probably we have done an A, B, C of a B wave. And if that is the case, then this should be going down as the first A of the C wave, and this as the second of the B wave of the C wave, for us to have a big drop to the downside. Once we break this low, then we are in for that C wave to the downside. Once we break this low, not this one. Once we break this low, we are in for a C wave. Because the other count may mean that we are bullish, that this one is like the first wave and A, B, C here for a push. That's the alternate count. That we are seeing that, okay, A, B, C is completed here, and that will be very, very shallow. And we're seeing that this is the first push, and A, B, C of that move then for a further upside. But then to read what is going to happen is in between this move in itself, because we may be seeing this as an A wave, that's the first one of the C wave, and a B wave for a further C drop. So in that case, we are taking this as an A, B, C. And if we have reached an a C here, it means that we are going to drop. Again, we may be looking at it as what? As if this is the first move on A, B, and A, B, C, then in this move, we are seeing this as a 1 and a 2 and a further push to the upside. That is what we are going to dig into. We are going to look at the alternate count. Let's go into the 4-hour time frame. Looking at the into the 4-hour time frame, like I said, we are looking this at this as an 1, 2, and a 3 in the making for a further push to the upside. That's the first one. Or we are looking at it as an A, B, and a C for a further drop. Those are the two scenarios. Now, it's in this wave itself, it seems to have reacted nicely at this resistance here, which may mean that this has ended. If it has ended a C wave, this actually are taking like a 50 resistance slightly to the upside without hitting 618, and we are seeing this reaction. The other thing you may want to think is this, and this is the way we are going to approach this trade. We may think that this is a wave 1 here, a wave 2 here, and a wave 3 and a wave 4. If this is a wave 4, this is way too big for a wave 4. So what is coming down here, you may think it's a wave 4, but it's way too big. It has broken the limit of a wave 4 slightly. And that wave 4, if it's a wave 4, that would be something interesting considering the magnitude of wave 2 here. So if this is wave 1 and wave 2, you may be seeing a wave 4 here that is silent around this consolidation, and the 5th wave, and now the first push to the downside. So how do I proceed? I'm proceeding to think that this may be the first move of wave C to the downside. Now, if it corrects to the upside, it should correct to the upside. We look the way and manner is going to correct to the upside. If it's the sharp movement to the upside and it's impulsive, then we are going to break it up. If it's a correction of an ABC, we should look for way to sell, because this may just give us an opportunity for us to sell. And once we sell, we are guiding our stop loss as we are coming down to see that if it's going to form the C that will break here. Once it breaks this area, we are bearish. Not even this area. Once it breaks this low here at 26, in fact, this area, 2600. Once it breaks 2600, we are bearish. We are going for that big C. Because this could also mean a wave 1. So if it pulls down more deeply, it may mean A of that wave 2, B, C to turn up. So this coming week will be decisive. This coming week will be decisive. But somehow, looking at what has transpired so far, I still favor a more downside to break into a bigger C wave to the downside to complete that wave 4 before we push up for wave 5. Did you get what I said? I said, if this is going to be a wave 2, it may drop a bit more. Give us a B wave, a C for a further push to the upside. But if not, if it has completed A, B, C, or a W, X, Y to the upside here, then this may not necessarily push more down. It may go up from here to give us a more consolidation of a wave 2 for a further decline. So any opportunity for us to sell, we should grab it to sell. I don't want to buy from here. I rather prefer this to go up from here to give me a sell for me to drop, or for it to come more down, give me a triad pattern of a consolidation for me to buy. That is how to proceed in the coming week. For now, do we have any imbalance here? Let's look at the, like I taught us, imbalance on the lower time, on the much lower time frame. Now, so on the much lower time frame here, we are seeing a push to the downside here. This move, an imbalance fill, this, and this. This is a big correction here, a bit of a bigger correction. So we don't expect, if we are coming down really as a wave C, we don't expect this resistance to be broken at 26,600 to be broken. And so 2660. 2660 should not be taken if we are coming to the downside. So the imbalance here now is between this area, yeah, at 26,520. Sorry, 2652 area, and this point of 2650. Between 2650 and 2652, that's where the imbalance is that we may see price pushing up to. Now, another thing is to look at this as the first wave and A, B, C. If this one breaking 161.8 is almost breaking it, once it breaks it, it tells you that, you know, this may be correcting to the upside, you know, around this zone here, 552, 2652, and 2650. If we get reaction there, we sell. With that, I've come to the end of today's update. Bye. Please like, share this, and we'll see you next weekend. For those on my orb, I may be probably updating you with charts, screenshot of my charts, then drop on the WhatsApp group. Bye.